Hello traders, in this video we are going to be taking a look at the Parabolic SAR indicator. So this indicator is free on most trading platforms. The main purpose of this indicator is to show you which direction the market is moving, whether it's moving upwards or downwards, whether we're in a bullish or bearish market. As you can see, I have already attached the indicator to my chart here. This is a 1 hour euro dollar chart in the MT4 platform, which has the Parabolic SAR indicator included. I've just attached it with the default settings, step 0.02, maximum 0.2. I've changed the dot to blue and a thicker line just so the dots are more clearly visible on my chart. Okay, so what we're looking for with this indicator is the trend direction, and that means we're going to trade in the direction that the indicator suggests. Okay, simple as that. So basically when the Parabolic SAR dot is below the price, this means the market is trending upwards. It might not necessarily be an obvious trend, it could be a range, but generally speaking, if the dot is below, we're going to look to take long trends, whereas if the dot is above, we're going to look to take short trades. Okay, now what I wouldn't do is to enter every time the dot changed from one side to the other. For example, you know, it could work. Some of the time you will catch nice moves and big moves. However, there'll be times when you'll be stopped in and out of trades, especially in rangy markets. For example, here, if we say, okay, the dot is above, let's take a short trade. Fantastic. And then we'll exit on the opposite signal. Okay, we would have made, 20 pips on that trade. But then in this instance, if we took a trade when it changed in the opposite direction here, and exited, we would have been at a loss. Here again, if we enter when the dot changed direction, a loss. If we entered with the dot change in direction here, a long trade, and exited there, again a loss. I'm just trying to emphasize the point of not using the indicator blindly without doing further market analysis. So we know the basics of what the indicator does is just to identify the trend direction. To be honest, this is something that you could do with a trend line or a moving average. However, there are some advantages to the Parabolic SAR, which I'm going to explain now. So for example, we see a nice uptrend forming here, okay, and we're going to consider entering in on this particular trend. So when to enter. So we're going to wait for the Parabolic SAR to show us a reversal. So when the Parabolic SAR goes on the other side of the direction we're looking to trade, and we're going to wait for the price, for the Parabolic SAR to go back on the other side of the direction that we do want to trade in, and for price to break out above the previous Parabolic SAR. So we can basically treat that as a resistance level. So in this instance, indicator is showing an uptrend, and we have the pullback. We'll mark that dot as the resistance level, and we're going to enter, and price breaks out above that, which coincides nicely with this resistance here, which is held up well. And you can see that when price did break through, it broke through with some force, which emphasizes the fact that this is a strong area of resistance. That in theory you could have traded without any indicators. You could have just marked the resistance on your chart, seen clearly that price is going up, wait for the pullback and then enter on the breakout. However, I appreciate that some of you like the visual appeal of technical indicators, even though they can be lagging at times. Thus, it's important to confirm with support and resistance, price action patterns, candlestick patterns, and obviously have good money management. So this is just one way you can use the Parabolic SAR for entering into trends. You can see this would have been a good trade. Had we entered on that breakout, price went over 150 pips. We could have used, this is a good thing about the indicators, you can use the dot as a stop loss level. I mean, some traders might not even use it for entry or exits. They'll just have it as a place to put their stop loss, trailing stop as well. So for example, if we did use it for the stop loss, the initial stop loss would have been around, well, let's just say 20 pips, just below the SAR level, the dot, which is a relatively tight stop loss for the 1 hour chart time frame. When you consider price went 150 pips, it would have been a good trade to take with a very good risk to reward ratio. Another thing is I would not have just left the stop loss there. As price was moving up, I would have moved it either below levels of support that were formed or trailed it on using the Parabolic SAR. So for example, as price went up here and here, you could have moved your stop loss. I'll just use this level just to show you can move your stop loss there, 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 there. Basically trail the price all the way up. Okay, there are times when you may have been taken out prematurely, for example here, which is why I said to leave a little buffer underneath the dot. And again, you could have followed it all the way up. Probably we would have been taken out somewhere around here, which is not too bad when you consider the market started to get quite choppy here, and still would have been a nice trade, almost 60 pips. Alternatively, you can leave your stop under these levels of support, this level of support that was formed here, okay, or close some of the position there, took some profit, you know, or if you want to go for the home runs, you can always keep your stop loss either in its original position, move it to break even. At least around here I would have moved it to break even, just so the winning trade doesn't turn into a losing one. I left it as long as possible if you want to catch the biggest move possible. So yeah, that's a few different ways to do your money management. I think it's worth mentioning, if we go back to this area here where I said you would have been taken out if your stop loss was on the SAR, if that was the case, we do actually have another entry. Okay, so remember, direction of the trend is up. We are looking for price to go, for the indicator to go on the opposite side, as it does here, and we're going to use that as our resistance level and wait for price to break through, and it did. Textbook trade, very similar to the first one there. There was still plenty left in the tank on that, over 100 pips. Stop loss below the SAR, 15 pips. Again, a good risk to reward ratio. And also here, this was a good level of resistance just based on price action alone. I mean, even without using the indicator, as I said, you could have just marked, okay, I can see we're in a clear uptrend. You don't need an indicator to show you that. And then just resistance, a pullback, indecision here with these pin bars and this spinning top candlestick pattern here. So yeah, that would have been another good trade. This is, as I said, the 1 hour chart. You can use lower chart timeframes if you wish. I just find that these signals tend to be more reliable on the higher chart timeframes, and it also means less time watching the charts. Have developed a free Parabolic SAR EA that will give you signal alerts when the Parabolic SAR changes direction. So get in touch if you want a copy of that. It's completely free. Okay, so here we have another entry, this time in a downtrend. So we wait for price to start forming a clear and obvious trend, as we see here. Clear downtrend as shown by trend line and the Parabolic SAR indicator. So remember, we're waiting for the trend to form, the pullback, the dot going on the other side, and then we're going to look to trade an entry on the breakout. So if we just mark the dot there, we're going to trade on this breakout in the direction of the trend using the Parabolic SAR. And this is zoom out. Okay, so clear downtrend, price breaks through this dot here and almost 100 pips, give or take, in a downwards direction. This giant candle here emphasizes the strength of these signals. It can happen from time to time. Of course, there will be times where price will just do like this, break below, and then go back up, do a fake out, let's say, and then continue in the opposite direction, which is why it's important to have sensible money management. I like to cut losing trades short and let winning trades run, just to try and maximize profit on trades. When you see this breakout below here, if we put the stop loss above the SAR level, which ties in nicely with this resistance level here, around 20 pips, still gives us a nice risk to reward ratio. We could have used the dot for trailing all the way down here, trailing the stop loss. Even if we were taken out here, still would have been a nice move, catching a decent amount of pips. You could even, if you know your charts, place a pending order below the, say when price is here, you could place a pending sell order just so it will be triggered when price crosses the entry point based on the SAR. Again, price action as well, showing bearish market. Okay, so that's how to trade based on the Parabolic SAR support and resistance levels in trending markets. This is really a trending indicator. I wouldn't want to use it personally in a ranging market. You can also use it for, not necessarily for entry and exits, but just to tell you which direction you're going to be looking for trades using your own entry criteria or another indicator perhaps. But I think it's a useful tool to have and relatively easy to use. Hopefully you found something useful in this video. Please like and subscribe for more. Thanks for watching.